Hey everyone, Monica Jazik from RPI Education, and welcome to the Financial Freedom Summit. In this series, you will hear from 21 experts sharing powerful wealth building strategies that 98% of people are not using. These interviews are packed with real actionable steps to help you fast track your financial freedom. So let's jump in with our today's guest, Eric Bergen. Eric, how are you?
Doing well, doing well. Thanks for having me.
Thanks for coming. I'm so excited. I have your bio in front of me. I'm going to read this bio, audience. Please pay attention. This is an amazing biography, a little lengthy, but it touches on a lot of good points, Eric. You have a lot of value, so I'm super excited for this interview. So Eric is managing member of 3E Management and founder of Top Shelf Models. It's a real estate consulting firm that provides institutional quality underwriting. It funds services and asset management solutions to investors and developers nationwide. He's also the founder of Top Shelf Models, a platform for its best-in-class modeling templates, and the creator of TSM AI, an innovative tool that transforms complex offering memorandum into fully built Excel models in minutes. I wanted to take a moment just to acknowledge that alone, Eric, and thank you in that because OMs are not easy to read. So Eric's mission is to make Wall Street level analysis accessible to the 98% of investors who historically haven't had access to the same tools, empowering them to evaluate deals with confidence and speed. With a background spanning underwriting, fund management, and technology-enabled solutions, Eric is passionate about bridging the gap between data and decision-making in real estate. He has trained hundreds of professionals through Top Shelf Academy and advises clients ranging from first-time sponsors to billion-dollar funds. At the Financial Freedom Summit, Eric's going to show us how AI is reshaping real estate investing and how everyday investors can leverage technology to gain an edge in building long-term wealth. Eric, I love this. Thank
Okay,
you
thank
so
you. I'm
much.
sorry for it being so lengthy.
No, it was perfect. And I want to kind of go in why it's perfect for people who are currently investing in larger real estate deals or doing analysis or even investing in private market equity. Reading these offering memorandums, otherwise we always call them OMs, can be very, very confusing for people. And analyzing deals can be quite confusing for people, especially on larger commercial properties. And I actually sat through one of your demos with one of your partners, and I absolutely left feeling like, wow, this is something that I could use because we're explaining in real estate investing and deal finding, it really is often a 110-1 approach. You have to look at 100 properties, you maybe tie up 10 deals, and then you close on one. And the analysis between doing these, especially commercial investments, it is a very lengthy process, and you often really wonder, am I getting it right? Am I missing something? And when we're raising capital for a lot of these private equity firms, you know, watching that glaze of confusion as people read offering memorandums and how much goes into those things, you've really simplified something so complicated and also personalized it for the investor. Like what you've done is absolutely amazing. And I think that really is the AI component and what AI is doing. I know it's like a buzzword that everyone just kind of keeps dropping, but you've taken this AI and really utilized it to create a solution that most companies aren't doing.
Right.
Like, this is like, how did you do this? Like, start us off, like, how did this all come about and what were you doing before exactly you
Yeah.
created this company and were doing this? How did this
Yeah.
happen?
So for sure. So I graduated with a finance and economics degree. Right after college, I did litigation consulting. Actually, I love that job. But when I graduated at that time, there was a lot of Enron and WorldCom and SEC investigation work, and so very quickly the litigation consulting turned into SEC investigation work, which was more accounting heavy than I wanted to be. And so I was there doing that for a couple of years. Ultimately, got a call from a headhunter. Ended up going to a company called Rockpoint Group, and I was at Rockpoint. They're one of the 5 or 6 largest private equity real estate firms in the world. But I saw them go literally from $0 of assets under management up to 90 billion. And so really saw them grow, from scratch. And they allowed me to have lots of experience in underwriting asset management fund services. So I was there for 12 years, kind of, honing that institutional knowledge. And what I found was, hey, I'm going to go start my own company, take this institutional knowledge and allow it to be used by, smaller developers, smaller private equity shops, individuals. And so I started my main company, 3E Management, which does that. It's a consulting company. As you said in the bio, our clients are private equity shops and developers. We underwrite deals for them, every single property type, all across the US. And we do asset management, we do fund reporting as well. And then from that, since we were looking at so many different types of deals and I didn't want to build models from scratch every time, I was like, okay, let's build these template models, right? So we have template models. That's going to be through our second company called Top Shelf Models, which sells template models, right? So a lot of shops are like, hey, I know how to underwrite, but can I have a template to start from? And that's where, we created these templates. We now sell them online, and we have, a couple hundred sales a year. And, but from our standpoint, it's really just the purpose was to make us more efficient in underwriting. So we're not starting from a blank Excel file every single time. We have a standard institutional quality template that we can start from. And then the latest iteration, as you said, is the adding in the AI component, because I'm a huge believer in AI and machine learning and where the tech space is growing and where it's leading to. And so if we don't make that change, us on the 3E side and the consulting side, we're going to get passed over by the machines. And so, a couple of years ago, we started building our kind of AI platform. And so now, as you said, is able to read the OM. So read that offering memo that could be 90 pages long. It doesn't really matter. It's going to extract out the assumptions and then model it into our, tested models that we have, right? So it allows for quicker analysis, just more efficient, and more accurate, right? And it also allows for just the regular person that doesn't have, investment banking, private equity background. They're able to look at deals and see the results and just load in tons of deals from these offering memos and then see, hey, how much capital do I need to raise? What are the returns? How does this deal compare to the last deal I looked at, right? And by doing that, they're just getting reps, right? So they're getting reps a lot easier without having to go through all of that education and years of training and years of building Excel models. It's basically handed to them and they can just load deals and see the results.
And that's just amazing, because what they really need to know really is the answer. They don't have to be an expert in building things. They want to just know the answer is, and how am I mitigating my risk here? Like, what is this real results of this model? What is the true ROI? What am I really investing in, and what is my risk tolerance? Like, to enlighten someone with that information so quickly. That is amazing. Is your software able to upload existing offerings? So say someone went to a market equity dinner and they're presented with different sort of OMs from issuers. Is it able to kind of almost take an actual someone else's OM and sort of analyze that as well? And then if you're just an investor who wants, because I have a lot of money invested in private equity, that's my preferred platform of investment aside from active real estate, private market equity. Those are my main forms of wealth building. And I love that. Like, it's transformed all of our retirement funds, our kids' education funds, self-directing, and these registered funds in the private equity space has been, amazing. But we've been dependent on this point of the OMs and our own interpretation of the OMs, as well as an explanation from our EMD, and that's walked through this. But for people who are just kind of collecting information and knowledge, they want to do their own due diligence, because I think understanding and participation is very important in wealth building. We don't want to just blindly hand things over to people. That's not the point of this. they're able to take an existing OM and read through the analysis almost of that?
Yeah, yeah, exactly. So it doesn't need to be, I mean, we've loaded in hundreds or thousands of OMs from all different broker shops, right? So it doesn't need to be, oh, only from this one, firm. It can load in the national firms, it can load in local firms, so we've trained it, and it is amazing how it can go in and find the relevant information and extract those assumptions out to input into the model. So yeah, they can, whatever OM, if they go to an investor dinner and they're being sold, hey, come invest in this project. All they'll need to do is just, ask that sponsor, ask that general partner, hey, give me the PDF, right, of the deal, and then they can load it in, and it should be able to read it and model it themselves.
That's incredible. And a lot, because there's so many people out there that are trying to raise capital and they're trying to do these deals, so-called amazing deals. And they really have a lot of these investor dinners and a lot of information sessions. And a lot of these deals are not solid. A lot of people contact me every day and say, hey, listen, can you like promote this deal? But usually we promote things that we've currently invested in already, sort of thing, or with companies that have done this due diligence. There's some sort of trust factor. We invest in what we understand and what we can understand. But so many people come and say, I have this great deal. And I want you to promote this for me. And I'm just like very reluctant to do that. 99.9% of the time I say no. I have people that I've vetted very, very thoroughly, visited on-site projects, met directors of funds. It takes a lot of due diligence because a lot of people in this industry fail.
Yep.
And people lose their money overnight. It's not easy to raise money with the securities commissions and all these things. It's tough. And people have to be really careful. But there's a lot of people that are going and preying on people. So the fact that they could take any information from anything, if someone just sends these e-blasts, people are sending information. And from a security standpoint, they shouldn't be doing that. I think that's pretty much a big no-no too. You can't just be soliciting people with information, but they'll send this. It's amazing that people can now be empowered so they're able to interpret it by putting it into this program.
Yeah, and most of the times the general partners, right, the sponsors of these deals, right, yeah, they send out that e-blast, they try to get investors, but they're going to send the PDF, right, explaining the deal, but very rarely are they going to send the underlying financial model, right, alongside of it, because really they don't want the investors stress testing that model and seeing downside scenarios. Hey, what happens when, we don't lease it up as fast, or vacancy increases, or CapEx gets out of hand, right? They don't want the investors to see like how quickly can that 20% IRR go to a 10 or to a 0, right? They
Yeah.
want to kind of show their story. And so yes, by doing the analysis yourself, you can load in and very quickly change, hey, what if rents are 10 cents less? How does that impact the ultimate returns?
Yeah, absolutely. One of the most powerful things I ever learned was when I was at a private equity dinner, and one of these very astute investor, or the director of one of these really great funds out there, he said, what everyone needs to be doing is recession proofing their businesses. And that in turn is really kind of what we need to focus on. You're right. There's so many of the good things. They want to overperform, whatever, but we want to be focused on the worst case scenarios. So there's the worst case scenarios, the best case scenarios, the most likely. And I hope everyone listening out there, if you're ever looking at an investment opportunity, you want to hear people sort of plan for what are these worst case scenarios? What are these numbers? What would you do in this recession? And how are you preparing to manage this fund? Because it's not, as we're in pretty tough times now. A lot of these funds have frozen and changed, collapsed. There's a lot of like collapse happening in these worlds. How could you have kind of invested in this with, that 2020 eyesight, not hindsight, but foresight, saying, what would you do in that worst case scenario? So yeah, thank you. I think that really, really lets people see the true picture. Now, you mentioned before you are like business, economics, you have, mortgage underwriting, all this practical experience, and then you just went on your own. Do you remember like a pivotal moment, an example of that time when you thought, you know what, I'm going to do this. I'm going to trade this 9 to 5, and I could do better on my own. I could invent a better mousetrap or get more freedom, or what happened to really make you make that difficult decision to just cut what was a good thing and become a full-time entrepreneur?
Yeah, sure. So, well, one, it wasn't 9 to 5. I mean, it was a grind. So, in litigation consulting, and then at the private equity real estate shop, I mean, it was 90-hour weeks, right? So, I
Oh,
mean, probably once a week, once every 2 weeks, I would literally stay there all night, right? And just continue working the next day. And there was a I was younger, right? And there was a pride factor and like just grinding the hours, right? And the pivotal moment was, two things. One, realizing that my time was valuable, and two was, I didn't want to work for someone else, right? So just grinding and grinding and grinding. You would be an employee for the rest of your life, and some people are okay with that. I wanted to take the approach of let me go. I've got this knowledge, right? Let me go now apply that knowledge and be my own boss, and really invest into something that I believed in, and not just be an employee that is up to the whims of the company, right? So it's really one of those things like, hey, I believe in myself, right? I believe in my knowledge and my experience and my analysis, the ability to analyze deals, and I'm going to trust in myself, and I'm going to go, hey, I can go analyze deals. I believe in myself. I can go build something, and my success and failure is now dependent on me versus, I remember at my first job, it was like, okay, my division would be killing it, and then it's like, oh well, your bonuses aren't as good because the some other division in some other city and state far away didn't have a good year, and I'm like, well, gosh, we crushed it here, and we worked a ton, and now we're getting punished because somebody somewhere else didn't do a good job. And that was kind of a pivotal moment of like, I'm gonna take the reins in my own hand and go build something.
absolutely, absolutely. And so, like, what gave you the incentive, like when you were to do it, because you obviously have that confidence. Do you come from an entrepreneurial family background? Were you always kind of encouraged to do these things, or was this something that you had to almost just really have faith in yourself and really kind of just, because that is a lot of hours, 90-hour work weeks, working for someone else, trading time for money. You had that confidence. Like, tell me a bit about sort of your background in that expert. Like, did you have that support from your
Yeah.
community around you, or was this really you were all on your own, you just had to go for it?
Yeah, I mean, I wouldn't say I was all on my own necessarily, but I did not come from that background, right? So my family didn't like instill that in me. It was really more of like, gosh, I'm just grinding away, and I'm not gonna say I can't do it anymore, but it didn't make sense to continue down that path, right? And so early on, so I left and started 3E, I guess about 10 years ago now, right? And quite frankly, built the process of building a team. We have about 20 people now, here in Dallas. And I apologize to those early employees because I was figuring it out, right?
Yeah.
Because I came from a very intense environment in private equity, and that's what I knew, right? And so my leadership style, my management style, kind of mirrored what I saw, and interestingly, I've had to change pretty drastically, as time has gone on to be more understanding about the employees and all that. So there was some ups and downs, just like starting any business. But I think I've made probably the greatest strides in understanding employees and really listening to them, and understanding where they're coming from, and not just be like go work 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 and produce, because there is a balance of you got to have it's got to be a good team environment, and it can't all just be working all the time and producing. It's got to be more to that.
Absolutely. No, totally agree. I think like at RPI, we always talk about time, money, freedom. And from someone in entrepreneurs, it's funny, entrepreneurship, it's a lot of people when you're starting out, you're trading like a 9 to 5 hour workday to work 90 hours and not even have that certainty of the paycheck. But when you believe in yourself and you believe in your growth, I think that's amazing. Was there other points of growth when you're starting out your companies? Like, did you kind of make a lot of mistakes moving forward? Or was it sort of a lot of trial and error? And how did you pursue through those sort of difficult times, if there were
Yeah.
any?
So, I'm an analyst, right? So, through my career at the other shops, I was building Excel models and doing financial analysis and asset management and, fund modeling and waterfall calculations, really, I'm a numbers guy,
Mhm.
right? And so I'm not a salesperson, right? And I still don't see myself, as a salesperson, quote unquote. But that was something that I really had to learn, right? So it's one thing to be confident in yourself and like, hey, I can analyze a deal, and I know a good deal from a bad deal, and how to stress test these deals. But selling is something that you're always trying to improve, that process. And that's something that I've made a lot of efforts and a lot of strides to get better at. Still not perfect, but but that's different, right? And even today, when I'm hiring and analysts and things like that, and I can't. It's not feasible to hire an analyst who's really good at numbers and then also make them get on the phone with clients to talk about the deal. Sometimes those are like two different people and two different skill sets, and I think it's rare to find someone that can do the numbers and be able to explain the numbers and talk on the phone, right? So and just like these investor dinners that you go to, right? The analysts who are like underwriting the deals, they're not the ones generally getting up and talking about the deals, right? They pass it on to the salespeople, right? And the salespeople are the great communicators and talking and selling the deal.
Absolutely. I think like building a team of specialists and not generalists is really key in entrepreneurship. And it's amazing how you are so analytical in that regards, but you have that creativity and confidence, of entrepreneurship and going on it at your own, which kind of makes sense in turn because in proof, you're like, wow, I could see how this can be successful. So you're almost hedging your bets even furthermore and kind of going forward from a point of confidence rather than pain. A lot of people I think are in pain. They're tired of trading that time for money and making money for other people, and they know that they could be doing other things. You were kind of probably like, hey, I can build a better mousetrap. If I'm going to do 90 hours a week, I may as well do it for myself and not someone else. And I'm so systematic, so analytical. I know I can almost mitigate my risk. I mitigate risk for a living for others. I'm going to do it for myself now because it's not a slam dunk, but I think it's always worth it in entrepreneurship. And the thing that entrepreneurs have to remember, as beautiful it is as it is to have time, money, freedom in your life, to be your own boss, you do have to wear a lot of hats at the start, at least until you build out your team. But you also really have to sort of keep, your eye on that prize and also organize planning. I think that's where a lot of entrepreneurs lack is they want the dream and they know what they want to do and they want to share their story and tell other people to participate. But it really is wearing all hats also entails a lot of organized planning. So if analytical people like yourself that are so systematic, and most of our members at RPI, engineers, accountants, and IT, which cracks me up because we operate on all these systems, all these models. We're always building real estate models. So we figure out what works in what area and have a team do it for you, exactly like what you do, but from a more analysis standpoint. So it's funny, I always laugh because I am more of like an entrepreneur, a creative, but I've made my success and my financial freedom as a real estate investor by really working on that analytical standpoint component, building that out for myself. Because until we had those models in place, we were making $1 million of mistakes. Like you can't invest in real estate or invest in anything just to invest. You have to have that analytical component. And we had to do it through trial and error. We didn't have AI. We hardly, I think Facebook just came out. We didn't have amazing people like you. We had to figure out all this stuff, on our own. And in a lot of our courses and training, when we're breaking that down, I will do it from a layman's perspective of how to truly understand how it works. Because finance is designed to go over people's heads. They don't really understand what they're doing. They kind of fall in love with either the salesperson or the idea or just a really good sales presentation. We want to empower people to understand what is really happening, how investments really work, and not so you could do this full time and be a full-time analyst, but so you can be mitigating your risk as an everyday investor and going in with an eyes wide open approach. So,
Yeah. Yeah. And I think for me, the analytical background, I mean, even to this day, 10 years into my company, I'm still constantly very checklist oriented and process, right? So, there's a way to do it, right? And you got to be consistent and follow that process every single time, right? So that helps me, right? When I hire new analysts, we have a training process, we have a training manual, we have case studies, we have, step-by-step instructions, written instructions, video instructions, so it's a repeatable process, right? And so for your participants, right, it's gonna be the same thing, right? Every time you look at a deal, you need to go through that same process, right? So whether that, the warm-up routine and looking at the deal, analyzing that deal to other deals, have that process built out. And I think in today's day and age, it is a lot easier, right, with the technology tools that are available to do that, right? So we use a lot of different systems and softwares to make it so that nothing slips through the cracks, right? So someone submits a demo request online, well, that automatically shoots it over and adds it to the board over here and shoots an email to that person and adds it to their calendar. And with Calendly and all these things, like it makes it so that you can have a team of people, a team of specialists, or just yourself. And the technology tools are there to kind of help direct you in the right direction and make sure that nothing slips through the cracks. And early on, when I hired that first employee, it made me realize, oh wow, it's hard to scale when it's just yourself. This was 10 years ago, but today I think with the technology tools, you could get a lot further on your own than you could even 2 years ago.
Absolutely. Like AI is just revolutionizing everything, and it really is replacing a lot of industries, a lot of professionals, a lot of people, and it's incredible. Now, I know as real estate investments, we, like you said, same thing, always focus on models, systems, put every deal through the same process, the same analysis. But we pay attention to what is going on around us. The economy has changed a lot. So we focus rather than change areas, often we are looking at changing investment strategy and how we can turn as an investor, increase the ROI through a totally different strategy. What is working? As AI is changing all around us and technology is all around us, do you find your products consistently having added on features and changing and evolving as well?
Yeah. Oh yeah, for sure. As a small company, we are constantly changing, right? And it's funny, you can look at it two ways, right? One way would say, oh, well, they don't have any direction. And that's the negative approach. The way I like to look at it is, hey, we're agile, right? We are seeing what's in the market and responding to the market forces, right? If we were just to only do, like right now, real estate funds have a hard time raising money, right? So, most of our target audience for real estate funds was, first time fund managers raising between, 25 million to 300 million. Well, those first time fund managers are really struggling, right? And they've been struggling for the last 2 or 3 years, right? And again, my job as the, as the owner, is the visionary, is to see like, okay, wait, this is going to be a problem. Let's not wait 3 years for it actually to be a problem, but like try to look at that market, look around. Okay, wait a minute, what are we seeing? And let's start changing small changes today that by the time that we really need to have changed, we're already there, right?
Yes.
So I think a lot of being on your own and analyzing deals is to, you're doing your day-to-day job. You're also looking to the future and say, okay, what shifts do I need to be doing today so I'm prepared and I'm not bypassed, a year, 2, 3 years from now.
Absolutely. Like you see trainers, real estate investment trainers out there teaching strategies from like 20 years ago in areas, and they just don't work. Things change. And oh gosh, if we want any example of how many things and how fast things change, let's look at 2025. Go back and think, holy smokes, like how many variables came up in one year in regards to, disasters, elections, policies, things that interest rates. We're just sitting there holding our breath, waiting for this next change. You recover from one and then you're hit with another. And who's seen a lot of this coming? So we have to be paying attention and noticing that it's not new, all this happening. If we look back in time, usually every 7 years, there's major changes and world events that come in and happen. We just got a few more of them a little bit closer together this time. But you got to be paying attention and we got to keep adapting. So I agree. I don't think that's unfocused at all. I think it's probably good business sense because pivoting in entrepreneurship, having that flexibility, I think also is truly important. So, fun question for you here. If you were to start from scratch today and you have no followers, no capitals, no capital, sorry, no connections, what secret move would you use to get ahead fast?
Yeah. So again, this is just from my own experience. I feel good about where I am today. So if I was going to start over from scratch, I would probably do the same thing, right? Which is be really good at analyzing a deal. Okay. And because if you're a really good analyst, and just speaking from my own experience, I got really good at being an analyst. And that allows you to enter the room, right? And have a seat at the table, right? You're driving the model, right? You're now listening in on these investor presentations and hearing the investor questions. And capital is tough, right? It's tough to raise money, right? But if you can analyze a deal and then learn how to talk about that deal and why this deal is better than all the other hundreds of deals that you've analyzed, that capital provider is going to listen to you, right? And so you don't have to be a great salesperson, but if you can say confidently, hey, I've analyzed all these deals and this is the one that I picked out of all the ones that I looked at, then you're going to be able to get a following, whether that's capital or followers or whatever your plan is. But I think that's what I would go with. Kind of really get really good at the analysis, because that's my business, right? So of course I'm going to default to that. But if you can analyze a deal, like everything else just kind of goes along with it. You can add on the sales and the marketing and the technology and all that other stuff. Those are kind of add-ons where the core is going to be the analysis.
I think analysis is so important. And I know I've seen people eyes glaze over when money, like to comprehend and analyze deals. It's a tough point for a lot of investors. And I was talking to your associate about this in our conversation as well when I demoed your product. And I was talking about what we normally use in regards to spreadsheets and to analyzers. And I am a poor math student. I was never good in mathematics. And because I was never a strong math student, I really second guess myself and I tend not to even trust calculators or spreadsheets. So in order for me to understand ROI and the components of deal analysis and how, because one gift I have is to know a good deal from a bad deal. I don't know. It's kind of like knowing a good person from a bad person, but put them through this sort of test. But I had to teach myself the mathematics behind it. And I think a lot of these spreadsheets, people are too reliant on the results of just the math alone on the spreadsheet. Because I second guessed it and I can now do mental math on most real estate deals because I truly understand the components of return on investment, ROI, how they all work together, and what factors in specific real estate investment models are the winner. And often in today's market, only certain components of ROI, it's very rare that you'd find a deal, and tell me if you believe this is true, that are going to have all four major components of ROI in one property analysis. Like normally it's just one component that's really the winner. I think too many people are looking for too many things. And your job as an investor, whether it's a small deal or a big deal, is to make this property, either cash flow positive or cash flow negative. And you should have a strong understanding of numbers enough that you're able to go and you could take any deal and make it positive or negative by showing what do you need to buy this for? What is your improvement strategy if there is one? What is your exit strategy? And how are you going to kind of work all this together and make this happen? And so when we do our course, I break it down to, like I said, this layman terms to really understand people understanding what ROI is. So they're not totally reliant on these spreadsheets that are so common today. Once people understand the importance of building that real estate investment model and incorporating common sense, I think people put a lot more on numbers than they do on common sense. I think common sense also needs to be incorporated into this, which comes from understanding of areas and strong economic fundamentals. A lot of people might say, yeah, oh my gosh, this is a 10 cap property. It's a cash cow. Yeah, it's in a low growth area that has no employment, that, has not gone up in value for the last 20 years. Like, this is not a good deal, sort of thing.
Yeah.
So,
And sorry, like, yeah, most of our, private equity institutional clients, they have their investment thesis, right? So like to that point, one client, I look at the median household income, right? When I'm looking at multifamily projects, and you could tell him this deal is amazing, but if it has below a certain household income, then he's not even going to look at it,
yeah.
right? Because he knows from his experience and deals and looking at the economy and whatever, that's his thing, right? So I think as an investor, again, have that process, right? Have those same steps and hold to what you believe in, right? So like, if there's this amazing deal with this great sponsor, but it doesn't meet all of your boxes, then, you got to think really hard about whether you're willing to, give up on your thesis to go chase that deal. In today's world, you probably shouldn't be chasing many deals today, but hopefully the economy and interest rates will turn around, and then it should be, hey, let's go find some deals.
And one thing I loved was when your partner was showing me the software, like you could take these commonsensical approaches, like you said, and incorporate them into this. So yeah, what's the house? Because I laugh, like I hear stuff all the time, as I'm sure you do. People say things like, buy this building for this amount. And the people in the area, you don't have any rent control. You could charge them whatever you want. That's not the way it works. People have to still be able to afford it. And if they can afford it, they're not going to pay you. And then what's going to happen? Yeah, I can charge them whatever I want. Okay, I'm going to charge everyone $10,000 a month. It's not going to work out that way. Like you have to have, it's a whole process when you build the model. So then you have to be realistic. Like you said, what are people making? Why aren't these people buying themselves if it's so cheap? These are the sort of things like what is the growth in the area? What are the main points of industry? Why did they want to rent my unit? And do I want to rent to this person? Who is this person? Do I want to rent? You can almost personalize these spreadsheets, which is incredible. Because a lot of the time I'll go to the dinners and I'll have tables at these dinners and I'll be like, yeah, like listening to all different issuers. They're like, are you going to invest with this? And I'm like, I don't like that area because I don't like the tenant quality, the people, the rental restrictions and whatever. And it's just not my model, like my personal model. But that's me bringing in that commonsensical approach. I can't be everywhere telling people, what I would do and they might love it. And a lot of people who are falling for it, because what do they want? Good returns on investments. And they're looking at just the cash flow where there's so much more into investments, especially in the private equity world. If they're able to take those concerns, put them in your spreadsheets to improve their analysis after they already have an understanding of how investing really works, I think that's just amazing.
Yeah. Our product, is going to allow you to go change, right? So I mean, it extracts the information from the OM. And if you don't believe in the rents, as an example, that the broker put into their OM, you probably shouldn't believe those rents. You can go in and change it. Say, hey, they said $1,500 a unit. I think it's $1,400. right? You can go in and say, okay, let's change this, 2 bedroom, 2 bath to 1,400 a month, and then click the button and it will rerun the model and tell you, okay, well, if it's 1,400 instead of 1,500, here's what those returns are, right? And so I think by, looking at a lot of deals, right, you'll get a feel for the how close and how much room, how much wiggle room you have to meet those returns, right? If you change $100 a month in rent and it crushes the deal, then that tells you, wow, this is very sensitive to that. And if, on the next deal, maybe it doesn't change much at all, right? And so, by just looking at deal after deal after deal, that's just going to give you that knowledge without having to go build spreadsheets, right? It's like, hey, let me just load in a bunch of deals and start playing around, right? Okay, what if I bought it for this amount versus that amount, or the exit cap, or I get a better loan, yada yada, and you can see the returns.
Absolutely. Absolutely. And it bewilders me why people even give these bogus rent projections and poor projections when they're looking to build capital over a long-term strategy. Like, don't you want to do well in this? Like, it makes you wonder. So that kind of really sort of distinguishes the newer players in the game who are once again like over delivering, whereas the older people, which you really do want to focus on when people are looking to do these things, are people who have mitigated their risk. They've recession proofed their funds, their investments, and they are giving you worst case scenarios. So they always want to over deliver rather, and rather than under. So they always want it. What do they say? Oh, they would rather over
Under
deliver.
promise,
Yeah,
yeah,
under
under
promise and
promise,
over
over
deliver.
deliver. Yeah,
Yeah, exactly. And I think that's the way that people should do things. But no, this is
but
this is great. Now,
yeah.
from a general wealth building perspective here, like from clients that you see in the investment world, other entrepreneurs, yourself, whatever, compared to like everyday people where we all came from somewhere, we're all people on this journey. What is the biggest lie or misconception about wealth building that keeps 98% of people stuck?
Yeah, I think that, um, in my opinion, that the 98% have always been, told, oh, like, maximize your 401k and, save, 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 right? And put money into the stock market and hire a financial advisor and listen to them, and invest in mutual funds and index funds, very passive investing, right? And true wealth is built over decades, right? But and again, it depends on what your definition of true wealth is, right? I bet if you double, every 7 or 8 years, like okay, that's great, but generally you're never going to make it as big as if you invest, proactively in a deal. Again, speaking from my own experience, investing in real estate projects, you can make a lot more money. Now it's riskier, right? So there's this whole, risk reward, balance. But, if you are confident in your analysis and you pick the right deal, and I mean, that's gonna be a home run, right? So that's where you're going to build true wealth versus, oh yeah, I'm saving, X dollars a paycheck and I'm putting it into my 401k that I'll see, 40 years from now. That's just too passive, right? There's a place for that, right? And you should be doing that. But my own belief is that, hey, let's take this current income and invest it in something that's going to give me a return in 3, 4, 5 years, versus 40 years from now.
Absolutely. I always say real estate's the most powerful wealth building tool, and one property in your portfolio could change your entire wealth plan.
Yep. And you get to use leverage, right?
Yeah.
And so, you put equity in and, you have 65, 70% leverage, and that just allows the growth of the project, to be exponential.
It does. Like there's no active real estate. And people don't need a lot if they're doing it right. I mean, we say you have your primary residence, 1 or 2 active investment properties, usually 1 to 3 boring buy rent holds, and 1 real estate for wealth, for a cash flow. And this really can create you as a personal portfolio as a multi-million dollar, create a multi-million dollar portfolio and really get that money working for you rather than you working for your money. You could even maintain your full-time job and have this active portfolio. In the meantime, other things really are growing in like your money, not the 401k and the IRA. A lot of these people are just putting them away in these set it, forget it kind of things. That's what we were doing until 2008 and everything. We lost everything because we didn't know where it was going. People were doing it for us. And the private equity world really opened up a whole new realm of, wow, how can I get better returns that I could have more control over my investments for? But now you've come in with a solution to even help people really kind of mitigate that risk. Because I think it's the uncertainty and the lack of financial knowledge and the lack of, because they're busy being a pharmacist or a doctor. They're not out there, they're not an analyst. That's tough. That's hard, you know?
Right.
So I love how it's really opened that door for everything. Last question is, what do you see the top 1 to 2% wealthiest people and families doing consistently that the rest of the world ignores or avoids?
Yeah, and this is going to be on the same theme here. I think the top 1 to 2%, they are constantly looking at deals, right? They don't get deal fatigue, right? So I think that the 98, 99% of the people, they're going to look at 2 or 3 deals and then just get tired and like just pick one of them. And I think that the top 1 to 2%, I mean, they are, like you said earlier, is like you got to look at 100 deals, right, to find maybe one, right? And so, and I think in today's market, you got to look at even more, right?
Mhm.
So, I think the deal fatigue gets 99% of the people where they just can't, like you said, they're doctors and pharmacists and attorneys and whoever, and they have a full-time job and they just don't have the time to look at deals after deals after deals, right? They kind of just, this one's good enough, right? But that's risky, right? Because they didn't do their full analysis, they didn't do their whole process. So I think sticking to your rigorous routine and looking at a lot of deals is going to set you apart and hopefully put you in that 1 to 2% versus just picking a random deal because you're tired.
Absolutely. Absolutely. I love that. Amazing. And is there anything else you want to share with the audience? I understand you have like a free gift that we're going to be including. Anything you wanted to share?
Yeah. So, I mean, we've talked a lot about our AI product. Yeah, and so for the participants of this, we're going to give you, a discount to go try out our product, so you can load in your own OMs and see it in action. So, yeah, stay tuned for kind of a discount code. And again, it's the market price is like $100 a month to be able to analyze these deals, and so we're going to give you a discount to that price, just to get you in there and again trying to get you on that 1 to 2% path of just looking at deal after deal after deal and learning from each iteration that you do.
I love that. And so thank you for that generous gift. That's amazing. And audience, this URL is going to be in the link of this email where you're watching this video. So make sure to click on that and take advantage. I'm also, if it's okay, you also do offer demos of these products as well for people. So if you wanted to do a little more due diligence and book the demo, the team is amazing. I did one personally. I really enjoyed it. I'm definitely going to be a future customer of you guys. And I hope we do a lot of work together and stay in touch. And thank you so much for your time and showing us, sharing your story and showing us how really this product that you created could really help create financial freedom for so many people. So thank you so much for that, Eric. You're a wonderful source of knowledge. Audience, thank you so much for tuning in, and we look forward to seeing you tomorrow. We will have another expert showing their strategy on financial freedom, and we will see you then.